a bang. This is a semiconductor company that makes what are known as AI accelerators, huge dinner plate-sized processors that are purpose-built for artificial intelligence workloads. And the market lapped it up, as I said, after pulling in an attempted IPO last fall when the AI cohort briefly went out of style. Cerebras refiled to come public in mid-April, originally seeking to sell 28 million shares at a price between 115 and 125. By the beginning of this week, they raised it to 30 million shares at a price of 150 to 160 because there was just so much demand. Then last night, the IPO price way above that, $185 per share, and today the stock immediately skyrocketed, opening at $350. While it pulled back over the course of the day, it still finished the session up a staggering 68% from its offer price if you got in the deal, but well below its high of the day. Now, you know that I thought the enthusiasm is way out of control here.
They know nothing!
But let me explain why Wall Street can't get enough of this thing, so at least you know the other side of my anger. Cerebras is one of the few companies that saw AI coming years and years ahead of time. Way back in 2015, they realized we need a whole new type of computer architecture for the data center. One of the big limiting factors for AI is communication speed. And because communications happens much faster on a single chip than between chips, Cerebras developed the largest commercial chip in the history of the computer industry. Each of these things has 4 trillion transistors. That's a T, 4 trillion. To put that in perspective, NVIDIA's super advanced B200 chip package, that's the Blackwell GPU, that only has 208 billion transistors, which I thought was a lot. Because all these transistors are packed into the same chip, Cerebras' technology has become incredibly useful for inference workloads. That's when an AI platform retrieves information from a trained model and puts it to use. According to the prospectus, this company's AI accelerators can be up to 15 times faster than leading GPU-based solutions. And in some unique cases, they're over 1,000 times faster. Cerebras can also help train an AI model 10 times faster than the usual hardware lets you. So, true advantages. They either sell this technology directly to customers or allow clients to basically rent computing power through their own cloud business. They also offer inference services through partners like Amazon and Microsoft, among others. Now, last year, though, Cerebras got 86% of its revenue from just 2 entities in the United Arab Emirates, one a cloud computing company, the other a university. The UAE is halfway to be a war zone right now, but that hasn't diminished the enthusiasm for this stock. Plus, Cerebras has been making strides to diversify its business. In January, they announced this $20 billion multi-year deal with OpenAI to deliver 750 megawatts of compute. In March, they reached a deal to deploy their monster chips in Amazon's data centers. So these are good contracts. That's the story. What about the numbers? All right, they're impressive too. Cerebras put up 269% revenue growth in 2024, then 76% revenue growth last year. Of course, the company's not yet profitable. Cerebras' adjusted operating loss more than doubled last year to $96.1 million, and its adjusted net loss more than tripled to $75.7 million. Their cash flow from operations is still negative. But the losses, they're not too distressing because this company's still in its growth mode, and the growth is really incredible. Plus, Cerebras has no debt, and they just raised $5.7 billion in cash from the IPO. So, hey, listen, they can afford to rack up big losses for years in order to keep expanding. I don't think they'll do that. Putting it all together, I like the story very much. The story of the company, not the stock. They're two different things. The company makes a very convincing case for the technology, and with the arrival of the inference era, Cerebras is in good position to grow like crazy, especially now that they're winning business from OpenAI and Amazon Web Services. So it is a great company, but man, after this red-hot start for the stock, it's very hard for me to get comfortable with this valuation. At $185, the offer price, Cerebras had a fully diluted valuation of roughly $56.6 billion, where it was trading about 111 times last year's sales. Not earnings, sales. Okay, that's important. Keep that in mind. Up here at $311, it's more like 187 times last year's sales. Sales. So now let's get the compares. You can write them down if you bought it so you know what you're doing here. Even though there's really no comparison to what they're doing, I like these. I'm going to give you these. NVIDIA trades at roughly 26 times last year's sales. AMD trades at 21 times last year's sales. Broadcom trades at 33 times last year's sales. Those just aren't in the same ballpark. And of course, NVIDIA, AMD, and Broadcom have the added advantage of being extremely profitable. You can value them on an earnings basis. Even the most expensive AMD sells at 108 times last year's earnings. I don't like that, but I get it. It's getting the same multiple on earnings that Cerebras got on sales at the moment it came public. Now it's almost twice that. See, that's wild stuff. Look, it's too bullish. Of course, Cerebras is getting that valuation because it's growing like a weed. But you know what? These guys had 76% sales growth last year. 76, okay? That is not that much different from NVIDIA, which was at 65. So really, if you buy the stock up here, you're betting on the idea that Cerebras will have much better growth in the many years in the future. Honestly, at this valuation, you're basically expecting revenue to be several multiples of what it is right now in a fairly short period of time. Maybe that's possible, given the company's impressive technology. But that seems like a real leap of faith to me. I don't like it. Not their fault. It's the fault of non-rigorous investors and traders and flippers. Really, I think that what's happening here is that Cerebras has a sexy story and a perfectly timed IPO. When the company's pulled its IPO last fall, it instead raised $1 billion in the private markets at an $8 billion valuation. So in other words, in the fall, this was worth $8 billion. Now, less than 8 months later, it's worth more than 10 times that amount. See that? Tell me that isn't silly. You who bought it. Tell me you didn't do something silly today. Think about what's happened over the past couple of months. The Philadelphia Semiconductor Index has exploded. It's up nearly 70% in just the last 6.5 weeks. Many individual companies involved in the data center builder have more than doubled over the same period. Think the memory players or CPU specialists like AMD or Intel. And some of these smaller, more speculative companies like NeoClouds and some networking or photonics plays, they've risen several 100%. Against that backdrop, along comes Cerebras with its differentiated process story, with chips that it claims are much faster than NVIDIA and ideal for the inference era. No wonder people can't get enough of this thing. But the bottom line, while there might be a situation in the future where I can recommend Cerebras, I just can't even get close to justify the valuation up here, given how much it's already run right out of the gate in those valuations I just gave you. I hope you wrote them down because they're just what I call dispositive. From now, I say keep your bat on the shoulder and hope the stock gives you a giant pullback. Because at these levels, no, it's too rich for me. You'll have to buy it up here without my blessing. I can't go back to 1999. You shouldn't either. Let's go to Barbara in California, please. Barbara.
Hey, Jim. I've been watching you for 26 years, and you have as much energy today as you did then.
Oh, thank you. Thank you. I've come to play. Thank you.
Seriously. Okay, you like Marvell. Do you still like Marvell?
Oh, yeah. That's Matt Murphy. He's doing an amazing job. He bought that optical business. He's really crushing it. I mean, if you want to